good afternoon. You're watching Closing Trades on ET now, and if you're a bull, you're looking at the Nifty and saying that it's looking just like a wow, because 20,300 on the index.
So beautiful.
So elegant. You want to add? Just looking like a wow.
Since thanks to us, you know what goes viral.
But it is just looking like a wow one way or the other, because the index is sitting at fresh record highs. Nothing much to complain at all. Of course, it's a Friday mood in the studios as well. And if you look at the market tracker, there are a lot more stocks advancing versus declining at this point of time. You have NTPC, which is high by around 4%. ITC is rallying hard. L&T, Axis Bank, Britannia, these are the top gainers for you. Of course, on the losing side, IT is playing a bit of a spoil sport today. So Wipro is down, you have HCL Tech, and some of these auto names are also reacting to the auto sales. So M&M, Hero MotoCorp, a little lower than what Street expected. So there's a bit of red on the screen on account of that. But what's shining away in the trading session is the public sector entities, and take a look at all of them, whether it's the defense pack or the power sector. Most of them are actually trading with quite a bit of green. NTPC, of course, we've talked about PFC, REC, other power names as well, GSW Energy on account of that CEO appointment, Adani Power, NHPC, all of these stocks are actually rallying away in the trading session. Mid-cap and small-cap sectors are actually sitting at all-time highs. So the gain really continues and the outperformance there. But Aisha, we are not alone in the party. Yes, we are quite excited by the moves that we have seen. But when we compare it ourselves to, let's say, a NASDAQ, we pale in comparison.
We absolutely do, because that's where the big party is. And just such wow moves there. Look at NASDAQ, that's held up by about 36%, and these are returns in dollar terms that you've seen year to date. S&P 500 index has staged a 19% move. Euro Stoxx 600, 16% move there. And yes, then comes the Nifty with a 12% move. So maybe further headroom from these levels as well. Hopefully we should catch up with what NASDAQ is doing and not just settle in for S&P 500 index. But yes, it's a global party and we're not alone in this global move. A lot of stocks which are actually holding out. Anisha was just flagging off what the PSU pack is doing, and today is no different for PFC, REC. I mean, not to say that the year-to-date gains already have been fabulous on both of these names, but REC disbursements figures came out for FY24 and they've already crossed the 1 lakh crore rupee mark. Still got the financial year left to go, and they're already at this particular level. So adding further fuel to the rally on this particular name. New India Assurance, though, that's much away from what the rest of the market is doing, because that's seeing a first sign of weakness coming in. And this after JP Morgan's view coming in, wherein they're maintaining their underweight and a target price of 90, saying that from these levels, after the run-up that the stock has seen, there's only very limited upside in the stock left. Also, Raymond, independent directors, they're going to be protecting the non-promoter minority shareholders, protecting employees, other stakeholders. That's the word really coming in, saying that they're going to be watching in the evolving situation with utmost vigilance. This, of course, comes in the light of all the personal disputes which are currently underway at Raymond promoter family. Raymond's still going good though, 4.25% higher for Raymond as we speak right now, because I think these statements from the independent director definitely has sort of breathed a sigh of relief for all the concerns which were going around as to what's going to really happen to the family right now. But in the meantime, there's Dixon, there's Z, Canfin Homes amongst the Nifty. You're already seeing the churn take place, the big movers or some of the biggest movers from the last high on the Nifty to now, case in point being a Hero MotoCorp. Today, that's a little lackluster. You're already seeing profit taking there. ITC, L&T, Axis Bank, they're the ones which are actually making a comeback. What's in store next, Kunal? We're already staring at 20,400 on the futures.
Yeah, 20,400 on the futures, and I think the only index now left is Bank Sensex to hit a new high. But I think it's been a very good comeback for the overall market in terms of the market breadth. Good recovery for the index from that 18,800 mark, where at one point there was a lot of pessimism, negativity, and yes, as you guys rightly mentioned, that the global bull market is on, right from the likes of equities moving up higher towards assets like bullions, gold, silver, which have also done reasonably well, towards crypto as well, which has managed to recover from those October lows. So I think yes, it's a full-fledged strong bull market. Hopefully, if we just pass out the event, which is on next week, and there is no major correction for the indices, I think we could be on course of hitting 20,500 on the spot as well.
Yeah, Over the weekend, you'll have the exit poll, or rather the state election verdict as well on Sunday, and that's something that the market is going to digest only on Monday. Although, given the exit polls, it seems like it's very well in the price. But on the point about Nifty Bank, Naresh, when do you see the underperformers from within the banks actually participate in the rally?
Already seeing some bit of a recovery in HDFC Bank, but today we've seen a good recovery in ICICI Bank, where it is starting to cross a two-month high. So one by one, we are seeing some bit of a recovery in all of them. But ICICI Bank taking center stage, taking the leadership with a 1.5% move today is a strong move. Same way, we could expect some bit of a recovery in our HDFC Bank and Kotak Bank, which are still sustaining around the last 1 month highs, but we are not seeing follow-up momentum. But yes, slowly and steadily, we should see momentum come up in the banking names. The leadership stock like Axis Bank has hit a new all-time high. The stock quote's around 1100 now. We could expect a bounce towards 1600 on HDFC Bank over the next few sessions, and then maybe a 970, 980 on ICICI Bank as well.
For the momentum, as far as the banking names are concerned, there's no stopping momentum on the power financiers, and we've been trying to dissect as to what could be the potential triggers now, because everything seems to be priced in, or at least the triggers are well known. So there's no fresh news flow apart from the fact that IREDA IPO just came out and there was a bit of re-rating on account of the valuation that stock managed to garner. We'll get Vamakshi shortly to talk to us about the various triggers at play for both those stocks as well. But in the meantime, Naresh, your view on the charts, should one book profits, or what should the position be?
So if you would have asked me yesterday also, the view would have been to book profits, and the stock has done much more than that. So it is in a parabolic stage where the only way to get out of it is to keep booking partial profits at every rise from here. Highly overbought on the short-term charts, very large volumes in the last 2 days. So in such a case, all you can do is either keep a trailing stop loss or keep selling some quantity. Cannot be a buy at current levels.
Level, but let me bring on board Vamakshi has promised to put our sense into how the valuations stack up and for the power financiers.
Well, yes, stellar moves is what we're seeing in PFC and REC today. Now, keep in mind that both of these stocks are actually perched at an all-time high today. Now, PFC and REC generally tend to move in tandem with each other, and that is because PFC owns nearly 52% stake in REC. And in fact, over the course of the last 1 year itself, we've seen stellar gains for both of these counters. PFC has managed to surge by almost 228%, while REC has gained over 236%. Now, with that, the valuations have also definitely increased for both of these counters. For PFC as well as REC, the 1 year forward price to book ratio is somewhere around 1.35 times, and when we compare it to their historical averages, for PFC it is nearly 5 standard deviations above their historical average, while for REC it is nearly 3.4 standard deviations above its historical average. So definitely the valuations have gone up significantly, and there are certain re-rating triggers that have actually played out for these counters. Both of these companies actually have very strong prospects, and in fact today itself REC announced that for the first time ever the company has crossed disbursements of almost 1 lakh crore in a year. Apart from that, the loan book for the entire group, that is PFC plus REC combined, has already crossed 9 lakh odd crores, and the management in fact expects the combined book to cross 10 lakh crore by this fiscal itself. Apart from that, the renewable energy space is also proving to be a new lending opportunity for the company. In fact, there is a push that is coming in from Government of India, and in fact in a recent interview with ET Now, IRDA, this newly listed player, also said that there was an opportunity to finance renewable energy projects of almost 12 lakh crores. And in fact, the company's balance sheets for both PFC as well as REC have also been cleaned up recently. In fact, PFC's GNPA has fallen down from 10% that we saw in FY19 to around 3.7%, while REC's GNPA peaked at around 7.24% in FY19, and it has dropped to lows of almost 3.3% in the second quarter. Apart from that, both the companies actually reported negative credit costs, and that was mainly on account of resolution of stressed assets. In fact, the management is expecting further resolutions ahead as well that could in turn propel the kind of credit quality that both of these companies have. So all in all, the fundamentals that do look resilient for both of these counters, but can the premium valuation sustain? Only time will tell.
Okay, and you're already seeing IREDA for the first time since its listing finally see some amount of semblance, and it's mildly in the red, 3% lower, 63.45. Of course, nowhere close to undoing the bump up that the stock has seen in the 2 days of its listed avatar. Well, my colleague Ajay Sharma had a very special and candid conversation with Nandini Piramal from Piramal Enterprises and Piramal Pharma about the management's immediate priorities for the next few years.
I think the benefits of hospitals and I think some of our doctors are amazing. And I think the kind of treatment that you can get within them is probably world class, right? I think the government's done interesting things with expanding the access to primary care and even things like institutional delivery. So, for example, in our foundation, we work with the aspirational districts, which is a program by the PM, where we're trying to work on reducing both maternal mortality and infant mortality. And, these are areas which are very, very tough, right? The hilly areas and that's, I think, where we can continue to improve access to institutions for some of those residents there. I think that'll be also beneficial.
I also noticed, Nandini, that you guys have put out a very interesting annual report this time around. It talks in detail about the plan and the the kind of plan you're aiming at executing. If I ask you to put it in words for the next 1 or 2 years, the immediate priorities of the management, what would those 3 priorities be?
I think revenue growth, focus on operational excellence, cost management, and productivity.
Point taken. So that's the latest coming in as far as the commentary from Piramal Pharma is concerned. But time now to slip into a very short break. But as we do that, a quick programming note. 18 Hour and 18 Hour Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on the 5th of every month. Join 18 Hour and 18 Hour Swadesh and Sundaram Mutual to learn how to build your financial future with an SIP in mutual funds.
Back with closing trades right here in 80 now, holding out very, very smartly in trade, 20,400 thereabouts now in the Nifty futures and an all-time peak now. Rakshit Ranjan too joins in on the show. Rakshit, hi, afternoon. Can't take our eyes off from some of the power financiers today, and especially in the light of, the dhamaka that the IPO of IREDA has been, or for that matter, the listing gains thereafter. Wondering whether the meat of the rally is over, or do you think the story has just begun?
Well, when you look at the GDP print, for instance, from yesterday and the granular details within it, I think the economy is in a very good shape. One of the best positions that the economy currently is compared to any other situation over the last, say, 10, 20 years. So in that regard, there is certainly stability. This is whether this is a beginning of a long rally in the market or it'll be a lot more gradual. That's a slightly difficult one to predict from a short-term perspective, but from a long-term perspective, looks pretty stable and healthy.
So yes, looking at the GDP print, looks like the demand is only going to increase. But Rakshit, what's the take on the auto sector? Because one was expecting in the month of November there would be some bumper sales that come out, but seems like they've missed the estimates by a bit. What would be your take on the auto sector? I know Marcellus doesn't have a lot of investments in autos directly, but even for the entire supply chain?
Yes. So when you look at the consumption piece, I think it's quite polarized. The urban consumption part of the economy is doing much better than the sort of small ticket consumption part. And hence within the auto piece as well, you would see those kinds of trends where small ticket consumption versus large ticket consumption would be affected by those two very different external environments facing that part of the economy. So I think that's certainly underway. Apart from that, yes, you're right. When it comes to stock picking, stock selection, we have relatively limited exposure here because barring a couple of companies, so for instance, in some of our portfolios, we've got Aisha. Barring a couple of companies, we don't see too many OEMs, barring a couple of auto anch suppliers, we don't see too many companies having a lot of pricing power here vis-a-vis either the customer or their customers or their sort of OEM customers.
So where have you added position, or which area of the market interests you most right now?
So in our consistent compounders portfolio, more recently, we've added Trent. That was about 4 or 5 months ago. And the reason for addition of Trent at this point of time is our conviction rising in this company not being just an apparel retailer, but in fact being an incubator of various retail formats. Our understanding of how Star Bazaar is shaping up is adding to that conviction, and I think that's one very big area of undervaluation of Star Bazaar when you look at Trent in terms of its expected fundamentals versus what it might deliver going forward.
Okay, that's the take coming in on Trent. Rakshit, curious to know, what is it that you've done in the last 2 months? Anywhere where you've trimmed positions or added afresh?
Yes, quite a bit. So in the banking space itself, we've increased allocation to some of the larger private sector banks because the share prices have lagged behind fundamentals by a very meaningful amount over the last 2-3 years there, and we think that is a big opportunity to benefit from. Even otherwise, there have been several allocation changes. On average, we've been doing about, say, 8 to 10% portfolio churn only related to allocation over the last year or so, and it has already started to yield healthy results. So some of the diagnostic players, for instance, Dr. Lal PathLabs is in our portfolio. We increased its allocation some time back. Divi's Lab we had increased, and as I said, financials as well. So yeah, those are some of the changes.
What about the specialty chemical space? Because that was one sector you guys used to focus a lot on. Any major additions or deletions there?
No, we are watching it very closely. We want to play it the way we see the external environment going through ups and downs. They were sort of inventory related, oversupply related challenges that the sector faced in the last 12 months. After a different series of challenges with some of these companies actually benefited from during the Russia-Ukraine war and the supply chain challenges thereafter, so on and so forth. So yes, I think it's been a long time, and we are watching this space very closely. We do have some exposures here, which we are trying to play to our benefit in the portfolios through position sizing.
Right. Okay, the other spaces, of course, are the likes of an L&T, Axis, Asian Paints, Bajaj Finance. These are some of the names which are holding out today. There's SBI, ICICI Bank too has finally made a move at that 950 odd level. So that stock as well is holding up. Autos not. They're seeing a bit of a profit taking. And then, of course, you know, they're the likes of an HDFC Bank, Kotak, etc., which continue to underperform as well. Rakshit, you just highlighted what you did with banks, but specifically on the underperformance that you've seen from the likes of an HDFC Bank or a Kotak, you think that might reverse in this very fast-pacing shift that you continue to see in the markets of late?
Yes, no, we do expect to see that reversing. So all kinds of overhangs, either related to management succession planning in some of those companies is cases or related to, say, some corporate action, so HDFC Bank and Limited merger. All of those sort of concerns that at different points of time the market had over the last 2-3 years on some of these stocks are behind us. We do see, in particular, let's say HDFC Bank, we see the benefits of the HDFC Limited merger being very tangible now when you visit the branches and understand how the consolidated entity is benefiting from synergies. Also valuations have become very attractive. And when you then look at some of the recent changes, for instance, RBI's recent increase in risk weights for unsecured loans, those kinds of changes, they directly fall in the lap of well-capitalized lenders, including well-capitalized NBFCs as well as well-capitalized banks. So those are some of the I would say tailwinds, the benefits of which we are looking forward to in the quarters to come, and hence, yeah, it's a very big opportunity, I think, to benefit from the dislocation in share prices vis-a-vis fundamentals that these large private sector banks have witnessed in the last couple of years.
One of those pockets where there's still some value on the table, but other than that, Raksha, there has been a massive up move this year in the real estate sector. In fact, one of the best performing sectors. How would you suggest playing this directly through a developer, through probably some affordable housing financiers, cables and wires, durables?
So we are playing this via cables and via affordable housing financiers and some home building material improvement companies. We are not directly invested in real estate companies because of the sort of lumpiness in their fundamentals over a longer period of time after long periods of lull. The consistency in the fundamentals that we seek is something that we don't find available enough in this sector. And hence, I think when you play it via the home building materials or affordable housing, not only new construction, even on existing housing, you tend to benefit from the sort of developments there, the economic changes happening there. So renovation of houses, upgradation of home decor, so on and so forth, are many drivers of growth in addition to just new construction of real estate, which we try to benefit from in these spaces.
Okay, Rakshit, on that note, we'll let you go. Thank you so much for making time and speaking with us. But Naresh, come in on the charts of a couple of these names. You have Dixon Tech, of course, which is reacting quite positively. It's 8% higher. And then JSW Energy, there's a new CEO on board, which has actually come in. And it's come in as a bit of a good news because the new hire, which is Mr. Sharad Mahendra, is actually a person who's been with the group for the last 15 years. He was in JSW Energy a few years ago in the capacity of a CEO for a particular vertical as well. So he understands the mechanism of the company plus the entire group as well. So it's coming in as a good news that at least it's a internal candidate and not an external candidate, because that would have brought a bit of change in terms of the strategy. So Naresh, on the charts, Dixon as well as JSW Energy?
So Dixon, if you look at it, 2021, the stock topped out around the 6,000 to 6,200 mark with a spike. We've crossed above those levels, but after today's up move of 8-9%, the risk reward is not great. So I would expect some bit of a pause around 6,000, 6,200 before it can continue further. So as of now, one can keep a trailing stop loss at 57.50 and ride onto the position. Going into JSW Energy, the stock looks promising from a longer term perspective. If we go look at the price back in 2021, the stock was at 400. We crossed about 400 recently, went to 440, then again did a dip to 350 levels, and now we are consolidating the around 400 mark. So once it can cross 440 levels, that would be a fresh breakout. So if that happens, we could be looking at a much bigger move towards 550 odd levels also. So out here, watching out for a sustainable move above 440 for a fresh trade.
We're talking about some of these stocks. Let's hear it out from the Dixon Technologies management as well. They're clearly betting big on the smartphone manufacturing, especially after opening their new plant in NCR.
I think for the value addition to double from where it is now to where we are targeting, it should take around 3 to 4 years.
3 to 4 years. So I also wanted to ask a question on, on the recent PLI 2.0 scheme, of which Dixon, has been a beneficiary. Your name has been cleared. How soon are you going to, set up production for the PLI 2 IT hardware components?
So we already have a large relationship with one large global brand, and we are expecting to bag some more large contracts. The teams are working on it. My target for starting this production sometime in April 24.
Okay, April 24. And how does the order book look like for the rest of the year?
So the commercial production is going to start from April 24, and we have very ambitious targets. Please appreciate we have committed to the government in our PLI application that we'll be generating incremental revenue to the tune of 48,000 crores over 6 years. So it's going to take time, but I think we should touch that level of 5,000-6,000 crores. per
So
year.
I also want to speak about the role that AI is playing across sectors, and now a lot of brands are and companies are announcing the integration of AI into their overall capabilities to increase efficiencies. How are you really integrating AI to increase efficiencies?
So at present, there is a huge focus on digitization. We are working on MES, the best of MESs, which have AGI incorporated.
Sir, I also wanted to ask a question on, the Chinese economy, which is going through some sort of a flux, in the recent past months, and numbers have not been encouraging out of that economy. What does it really mean for India's manufacturing ecosystem, and are you positive on that? How do you see that development?
So I think it's an opportunity for India. We have been talking about China plus one. We have been seeing the evolving geopolitical situation. However, we had also seen the supply chains in China were very deeply entrenched, and to move them was not easy. But with the Chinese economy slowing down, one feels that there is an opportunity now.
You of course are present in home appliances. You're also present in security, surveillance cameras, and several other divisions as well. But mobile phone manufacturing comprises of a large percentage of your sales. Do you see that holding strong even in future? What's your outlook on that?
Please appreciate in the whole electronic devices space, the largest piece on canvas is mobiles. And in Dixon's case also is going to be the biggest trigger for growth. So what you're saying is absolutely right, and that large contribution in our revenues and large contribution in our growth journey is going to be from mobile the next 2 to 3 years.
Okay, so that's the latest coming in from Dixon Tech. Almost 48,000 crore worth of revenue over the next 6 years through that PLI is what they're targeting, and even export is something that they're quite bullish about. Since we're talking about exports, the Middle East region has been one area which has been a good export hub in terms of the export from India to Middle East. And we got up with Arvind Ramamurthy, the Chief of Market Development at Abu Dhabi Global Market, and talk about how it can become a launch pad for Indian startups and other companies to go global as well. Listen into that conversation.
Fundamentally, India and the UAE are strategic partners, right?
Right.
We've been strategic partners for a very long time. And if anything, the strategic partnership has grown from strength to strength over the last few years. At ADGM, from the finance community standpoint, and to an extent even the technology community standpoint, we act as that gateway for these players to come into Abu Dhabi. We've got multiple initiatives here, from Hub 71 that supports startups, to ADGM and the financial regulations we have, where we house players, as you're aware, like SBI, like Reliance, to name a few. We have Kotak as well here, and many, many, many others, right? And the way we look at this is, for a lot of the Indian companies that today want to go global, right? As you know, that is the mantra in India, where people want to go global. We believe at Abu Dhabi and ADGM, given our direct application of English common law and our kind of regulatory progressiveness, is a great conduit for them to grow global. Of course, the region itself is growing, as you're aware, Mihir. So there are tremendous opportunities in the region today. And then you add to it Abu Dhabi's connectivity to the world. It also gives them an opportunity to grow global from here.
Welcome back. While the rest of the market is actually doing okay, there's quite a bit of breakout on ITC. That stock is holding up with a gain of almost 3%. But on the losing side, it's IT stocks which are coming under pressure. Wipro, you have other names as well like Infosys, etc., which are down and out. Kunj Bansal is also joining us on the show. Kunj, TCS buyback has got open. That's 17,000 crore buyback, and it's coming in at a premium of almost 20-25% from the current market price. Would you recommend people to tender in their shares?
So actually, these days the buybacks have become synonymous with dividend. What earlier companies used to give dividend, now they have started preferring buyback. In between there was a tax arbitrage. Now there is some and there isn't some. So I don't particularly have a view on this stock, but it comes back to the horizon of investing. So as long as you are comfortable with the medium to long term investment horizon and you are comfortable with the sectors and companies financials, then there is no reason for anybody to kind of look at exit. One should continue to hold on to good quality stocks.
Your view on ITC, almost 450.
In fact, I think it's a fresh breakout now for ITC, back above 450 mark. I was actually looking at many of the other FMCG names. I think Britannia has also done reasonably well in the last 2-3 days. But specifically for ITC, this seems to be a strong breakout above 450 mark. And the base building which the stock has done over the last 2 months or so, I think from 496, that was the high, if I'm not wrong, for ITC, towards the point when the stock was almost at 425 levels. That means a good 15% to or 20% correction, I think, is now behind. So this looks like a breakout for ITC 455 mark, and would now look out for next targets closer to 470, 475.
Let's also check in on the new listings from yesterday. Let's see what Tata Technologies is up to. What a blowout day it had on its debut day. Besides that, of course, there was Gandhar Oil, Fedbank Financial, all of them, while, Fedbank started off a little bit tempered, but that too joined into the party. And today, most of these names are seeing a quiet and somber day. Not quite Fedbank, though. That's still holding up with a gain of 1.6% or so. Kunj, curious to know whether you've been a subscriber in any of these IPOs of late?
So again, IPOs these days have become quite popular because of the lot of money being available in the market. And irrespective of valuation, which in quite a lot of cases we have seen. So there are multiple cases, of course, a company with not so good financial coming out with an expensive valuation. Company with good financials coming out with expensive valuation. Let's not talk about the companies not coming out with expensive valuation, because most of the companies are coming out with expensive valuation. Now, going back, as I was saying, there's a lot of money available in the market. And in such a scenario, even not so good companies with expensive valuation gets subscribed multiple times. So what to talk of the expensive, good companies getting expensive valuation and getting oversubscribed. Now, as a result, one doesn't get any allotment in the IPOs. So instead, one should focus on the valuation at which one is comfortable for entering into such companies post-listing, depending on the premium at which it gets listed or the discount at which it gets listed, and what is the valuation at that point of time. Invariably, such an analysis will bring the investor back to the fact that if there are other companies available in that sector in an already listed space, probably their valuation will be cheaper than the premium offer price plus premium at which a new company gets listed. So that's where the investment advice will go back, that instead one is better looking at already existing listed companies available in that space.
Sure, of course, today was a listing of Flare as well. That opened with a decent amount of gains. Let's see whether that one is holding on to gains or not, because I think it opened with 50-60% gains higher than what it was expected to as compared to the issue price. So let's take a look at Flare Pens and Flare Writing as well as to what it has done. We'll try and bring that up for you shortly. But in the meantime, let's talk about auto sales data, because of course, for most of the companies that's out, it looks like most of the companies have disappointed, especially when it comes to commercial vehicles as well. There has been quite a bit of disappointment today, Shrishti.
Across the board, we are seeing a mild disappointment kicking in for the November auto sales data. One factor to blame for is that given the festive cheer, the expectations were quite high. So in comparison to that, yes, you can see the data is disappointing a bit, but that's what the stocks are at least reacting in a similar fashion for now. But the analysis that between two-wheelers and passenger vehicle, which segment to go for, where we guided for our viewers that two-wheeler is the segment to look out for, because rural push is definitely expected to give a push to the two-wheeler industry this time. That analysis is definitely bang on. But let's talk numbers then, and this time from the passenger vehicle pack, we are seeing a decline of 5 to 17% in this particular range for on a month-on-month basis for companies of like of Maruti Suzuki, Tata Motors as well as M&M Automotive Division, and all these three companies have really disappointed and registered numbers that were a little below what we were expecting. Coming to the commercial vehicle segment, we didn't guide it for a great set in the month of November because of the seasonality kicking in and other factors at play as well, but the dealers are highlighting that going forward in the next year there could be a push. So this is the segment to look forward in the upcoming months, but for now on a sequential basis we are seeing Ashok Leyland sales declining 17%, 17%. Similar sort of a decline for Tata Motors and Eicher Motors VECV. Sales declining almost 30% on a month-on-month basis. In the two-wheeler segment, we have seen a growth of 30% on a YY basis for the likes of Bajaj Auto as well as TVS Motors, and both of these companies have registered number in line to what we were expecting. So not a disappointing set, at least for the two-wheeler segment. And lastly, from the tractor division, yes, a disappointing set, but this is what we guided as well. And in terms of that, a decline of 36 to 37% for the sales of M&M tractor as well as Escort is what we have registered for the month of November. But the commentary in the times ahead is quite positive. So this is also a key segment to watch out for in the times ahead. But for now, a bit and a mild disappointment kicking in across the board.
Shrishti, we leave it at that. That's the data points coming in from the November auto sales so far.
Okay, in the meantime, we have Amara Raja Batteries, which is up a good 8%. Kunj, do you have a view on these battery makers, Exide Amara Raja?
So not particularly on battery makers, but we know that, and you were just showing the automobile sales numbers. Let's put a different perspective to the automobile sales numbers. Generally, the industry considers the festival period starting from the last day of Shraddh, first day of Navratri till Bhai Dooj, which is about 42 odd days. And in this year, in those 42 days, there have been around 20% plus growth in general in the automobile sector. More particularly, that growth has come in two-wheelers also, which was earlier missing. So we are seeing that in consumption, the whole consumption space in India has got divided into two spaces. One is the lower end consumption and the other is the premium consumption or the higher end consumption. Higher end consumption, we have been continuing to see good growth, but same has not been the case with the lower end consumption. We have clearly been seeing stress in demand in urban areas and in consumer goods and lower priced commodities and lower priced products and things like that. The same was reflected in two-wheeler sales also. But in the retail sales of 42 days of festival season, the two-wheeler retail sales growth have been 20% plus. And if at all the reason for the monthly sales numbers for November, if we consider below expectation or something, is that the primary sales had already been booked by these companies in October for the festival season and Diwali, which fell in November. So I think given the way the auto sector has been picking up, that has to get passed on in terms of higher demand to auto ancillaries also. And that's what has already led and will lead to the performance demand of the shares of the auto ancillary companies also, and as a result, the rise in their share prices as well.
Sure. In fact, since we are winding up for the day and the week as well, let me quickly take it across to Sharad, find out what the dealing room chatter is this Friday afternoon.
We are hearing from the dealers is a sustained buying is being seen by certain domestic institutions for this cash counter. Now looking at the volumes also, that has also picked up almost 12 times its 20-day average. And in today's trading session itself, the stock crossed its 200 DMA mark as well. The key DIs already invested in the company includes the name of SBI Mutual Fund as well as UTI Mutual Fund. We did some channel checks also, and what we are hearing from the channel checks is that the company's HPPC segment is expected to do well in the third quarter. This HPCC segment is nothing but the home personal care and performance chemical segment. And of course in Q2 also these numbers are very good from this segment as well. Also on the capex portion, the company is in the process of acquiring its neighboring land near its Unitop site, and this will be where the capex will be going on for the second half of FY24.
Okay, thanks so much, Sharad, for putting that into perspective. But Kunal, your take on Larsen & Toubro seeing a bit of a breakout, and then M&M, I think it's just the commercial vehicle sales which haven't been that impressive, and we are seeing a bit of decline on all of those names.
So I think L&T is an interesting breakout. The stock is coming out of an inverted head and shoulder pattern on the daily charts, and this is more of a continuation pattern. We call it because the stock was going through a consolidation rather than a major correction for itself. And now heading towards a strong breakout move. This could probably be at least a 200-pointer move for L&T in terms of the breakout. And the breakout is around 3120 mark, which means 3,300 broadly is where we can keep a target for L&T. M&M also, I think till yesterday or day before had a good strong up move till 1650 odd mark. Today could be an off day for many of the auto stocks. I think I was looking at Hero MotoCorp, Bajaj Auto, many of these stocks are trading into a slight negative territory for themselves, but I think I would probably call it as an off day. maybe another couple of days of mild correction into these stocks. But for someone who's looking out for buying these names, I think the next couple of days could probably throw in a good opportunity to try and buy them on dips.
Okay, that's the take coming in on L&T and the rest. In the meantime, Axis, Britannia, ITC, Asian Paints, Bajaj Finance, they continue to hold out, as is the case with SBI as well as ICICI Bank too. IT, of course, continues to be in the slump. Today, you're also seeing a bit of a profit taking, not just for Hero MotoCorp, but Maruti and Tata Motors as well, which are lying quiet in trade. Kunal, just want to again come back to you on Tata Motors. We've already made it to that 700 rupees per share plus mark. Does the stock consolidate here, and does it become a buy if the consolidation were to last longer?
Well, yes, Asha. In fact, since yesterday the stock has mildly ebbed off. I think yesterday in terms of the spot high, the stock made a high of 710, 712, 715 mark approximately. Today it's at 704. So I think over the next couple of days we might see the stock getting into a mild bit of a drag, maybe come back towards the sub 700 levels. But that could be one of the better zones in terms of buying the stock on a contra basis. The momentum is extremely high for many of these auto names. So when you're expecting the momentum to be very high, the correction into these stocks could be very short-term oriented, as well as they may not be major, severe in terms of the prices. So I think in that aspect, we may not be looking out for major corrections on the stock. But I think 695 to 700 zone broadly could be a good zone to enter the stock.
I just wanted to bring up BHEL as well. There's the latest note that has just come in from Nuvama, and they've raised the EPS estimates for FY25 and 26 by 56 and 32% respectively, and they have increased the target price to 225 rupees on the stock now, and that compares to 150 rupees earlier. So there has been a major upgrade that has come in for BHEL. Let's pull up the 1 month chart if we can of BHEL, because that stock today of course has been fairly okay and quiet as compared to the kind of up move that we have seen over the last 1 month, and that's the chart for you. It's up a solid 40%. Kunj, quickly come in on this one.
Very frankly, I have not looked at it, so I wouldn't have any view on this.
Sure. What about you, Naresh, on the charts? What would you suggest for BHEL?
So I would expect some bit of a pause after the move it has seen from 120 odd levels just a month back. The stock has moved up quite a bit over the last month, and we are getting to a very important resistance area going forward, which is that 190 mark, which was the high in 2015. So for now, I would expect us to drift towards 155, 160. And that's the time one can look at it on a fresh basis, expecting a drift down here in the short term.
Okay, that's the take coming in on BHEL. And I think for the week as well, BHEL would be one of the largest performers or biggest performers for the week gone by. While the week, of course, started off with outperformance from the Adani names that was lapped up by autos. And then, of course, PSUs, they continue to rule the roost. That was the case with the BHEL, PFC, REC. And then, of course, how can we not forget the two big listings as well this week, and that has been the case. That's IREDA as well as Tata Technologies. They've really hogged the limelight in the week gone by. But let's just recap what some of the auto review performances have been for the month of November. And it's actually a below count for M&M, Tata Motors, for Maruti, for Eicher Motors. That's the Volvo Eicher, the CV segment. Tata Motors as well, CVs as well as the passenger vehicles, Ashok Leyland, M&M Tractors, Escorts, they've all fallen short of what the market was anticipating. So maybe that's why a bit of a pause as well is what you're seeing amidst the auto names. But yeah, PFC, Dixon, REC, Canfin Homes, they continue to hold out just very, very smartly indeed. But let's also take in some BTST ideas before we wind up for the day. Naresh, what's your list looking like?
So first is the buy in Hindustan Unilever. The stock is going to break out in the last 2 days. Stop loss at 255 and a target price of 2610. Second is a buy on ICICI Bank, which is a reversal. Stop loss at 945, target price of 960.
Right, Kunal, what about your BTST ideas?
So I'll go with the buy on Exide Industries. The stock heading towards a breakout. In fact, confirming a breakout today about 290 mark. So buy with a target of 312. Stop loss could be kept at 285. And the second would be on NMDC, have been bullish on the stock and continue to be bullish on the stock over the near term, expecting a target on the side towards 190 and stop loss at 179.
Okay, so those are the BTSC trades coming in. On that note, gentlemen, we let you go. Kunal, Naresh, as well as Kunj, thanks so much for making time and speaking with us. It's been a good week for the bulls, given the fact we managed to hit fresh record highs for the Nifty, 20,300 almost. As far as the index is concerned, yes, ending off the highest point of the trading session, but nonetheless, a good 100-point gain coming in. For the Sensex, and the mid-cap and the small-cap indices too managed to hit record high levels this week. The advanced decline ratio was quite positive, and if you look at the sectoral performance this week, it was energy that was doing okay because the PSU names, oil and gas names, they were in flavor. Adani group of stocks, as Aisha pointed out, were doing quite well. So Adani Energy and Adani Green were some of the names, and then PSU banking names, Aisha. You had PNB, which was higher by 6% slowly and steadily, and Canara Bank, Bank of Baroda were some of the other ones.
Yeah, they were, but it was really the energy names which actually flung high, and the power financiers like we were highlighting. I don't know if we can bring up the PFC, REC this week charts, because that is actually going to show you the true price action that you had this week. Not just today that they have been big movers, but over the week as well, they've seen some stupendous gains coming in. That's REC closing in today for the day with a 7.5% gain. And then, of course, REC as well has been no exception, or rather PFC has been no exception. It's a 9.25% move that it's closing the day with. The churn continues. So today, autos have abated a little bit. Bharti as well has been a laggard today. And yeah, IT continues to be a little bit in consolidation phase. But that's pretty much all the time that we have on this edition of Closing Trades. Thanks for watching.